So whatever the reasons, your reasons for investing in gold, whether it's scarce, durability, portability, fungibility, we think that Bitcoin matches or beats gold across the board in all of those categories. It's actually not scarce; it's fixed. You can send it around like you send an email. It's a lot harder to do that with bars of gold.
And meanwhile, the real-life wolf of Wall Street, Jordan Belfort, told CNN last week that while there's a lot of excitement about Bitcoin right now, the market is bound to come crashing down.
You have this skyrocketing demand with very little supply, but then at a certain point something will happen. There'll be either regulation will pass, something will go wrong, and all of a sudden the sentiment will change and it is going to drop so hard and fast.
And Joe Grunfest, a professor at Stanford Law School and a former SEC commissioner, expressed his concerns about the unregulated nature of Bitcoin. This was also last week on CNBC.
From my perspective, we're still in the Wild West phase over here, and the technology is several steps ahead of where the regulatory infrastructure is. I'm not entirely persuaded that all of the regulators really understand everything that's happening in this market.
Okay, a lot of questions here. My guests today are Nathaniel Popper, who covers finance and technology for the New York Times, and via Skype, Campbell Harvey, professor of finance at the Fuqua School of Business at Duke University. And Campbell, first to you. One of your colleagues, or at least another professor at Duke by the name of Lawrence Baxter, wrote this recently, actually this week. At the first serious and likely coordinated move by governments to regulate or bank the digital currency, Bitcoin's price will crash to zero, panicked owners will rush to exit, and the bubble will burst. Bitcoin futures and options may just as well be based on pixies and fairies. Now, that's a pretty pessimistic outlook for the Bitcoin business. What do you make of that argument?
So obviously I don't agree with that. So I did say I believe that there is kind of bubble-like behavior right now, and there could be a very substantial correction. Indeed, I think it's prudent for somebody investing in Bitcoin to be prepared to lose 90% of their investment. So going in, you need to be able to understand there's a possibility it could drop by, let's say, 50 to 90%. But I think this idea of regulation, one thing is that Bitcoin is this international sort of currency. There's no central bank that's controlling it. There are some countries that have already banned Bitcoin, but if one country bans it, it just goes offshore. The more important point is that the future is actually very easy to forecast, that we will be in a world of cryptocurrencies. All currencies will be cryptocurrencies. And right now we see the first wave with Bitcoin and Ethereum and things like that. But more realistically, it doesn't make any sense to have a paper currency for any country. That will be a relic in the future. And the Federal Reserve and all other central banks will issue their own cryptocurrencies. And when they do that, then there could be some real competition and pressure in terms of the regulatory environment that threatens the cryptocurrencies like Bitcoin and Ethereum.
Okay, here's a question that I want you, Campbell, and you also, Nathaniel, to answer quickly. Article just appeared on Bloomberg last night saying that Bitcoin trading has expanded faster this year in emerging markets than in developed ones, and quickest of all in places where authorities have tried to crack down. After all, avoiding bank and government oversight and sidestepping the eroding effects of inflation was what this mysterious person Nakamoto had in mind when he, she, or they created Bitcoin in 2008. First, Campbell, to what extent is the success of Bitcoin precisely this kind of libertarian, anti-government quality to it? And once governments start to take more notice of it, does that undermine sort of faith and interest in the system?
So it is true what you say, that initially it was very much founded by libertarians, but I think the group of people that really understand the blockchain technology, expand it, and especially the economists just seeing the value of having transactions with almost no transactions cost. That makes everything more efficient. It makes everybody better off to have a system like that that's immediate, that you take a lot of middle people out of the equation. It is also true that there are many emerging markets that are in distress, that they can't trust their own currency. It's hard to get US dollars. So this is very attractive. And I always thought that Bitcoin and other cryptocurrencies would have the best growth in emerging markets where there was a real need for an alternative currency. But that really didn't play out because of the speculative demand in the U.S. So that's where the price appreciation is being driven.
And Nathaniel Popper, one of the places where there's a lot of interest in Bitcoin, not surprisingly, is in Venezuela, where their currency loses a good part of its value every day. What do you make of Venezuela's interest, even the Venezuelan government's interest in Bitcoin and cryptocurrencies generally?
Yeah, I mean, as Kimball noted, I mean, people who kind of really believe in this technology have thought that it had the most potential in places like Venezuela and Zimbabwe. I mean, in writing my book, I spent a bunch of time in Argentina where I saw ordinary people using this to kind of escape inflation or trying to escape inflation. And, you know, as an American, it's hard to understand what it's like to live in a place where you don't trust the local currency, and where it's hard to get a bank account. And so this does look more plausible in a place like that, where even just having your money in the local currency is very risky. Yeah. So in the United States, you know, keeping your money in the dollar is not a terribly risky endeavor, and changing it into Bitcoin creates a lot more risk. But for a Venezuelan, it's